Was certainly a weak day of trade, but we'll be assessing that and lots more as to what you should look out for tomorrow. On the show today, we'll have Jitendra Shriram, Director and Head of Research at HSBC Securities, joining in. To talk more about the fundamentals is Mehrabun Irani, Principal and Head Private Client Group Business at Nirmal Bang Securities. And to assess the technicals on the show today, we will be having Sandeep Wagle of aptartindia.com joining in on the show.
Let's join in Mr. Jitendra Shriram from HSBC Securities coming on the show now. Jitendra, the biggest issue plaguing the market right now, not only in India but globally, is the Cyprus issue. How do you see this small country really hampering the sentiment across the globe?
Well, I think there are two things. One is, if you look at what happened when the Greece bailout was done, it was supposed to be like a one-off and probably not to be kind of replicated and so on. But with Cyprus, you're again seeing a kind of a $10 billion bailout. See, the quantum of money is not important, but it clearly brings back the concept of, again, risk on and the concern that has been there in the market. In a sense, what is happening is when on Tuesday morning, as per the current plan prescribed, most depositors would end up losing, if they have over 100,000 euros in their account, they would end up losing about 10%. Or if it is under 100,000 euros, they would end up losing about 6.75% if the numbers serve me correctly. But broadly, that is the extent of loss that you would see across depositors. Again, brought back the whole concept of risk aversion back to markets. And it will obviously have its contagion impact going into rest of Europe as well. So to that extent, what you're seeing is a nervous reaction from equity markets to this weekend development.
Jitendra, hold that. So I'll come right back to you with some more questions. But we've also got Mehrabun Irani as well as Sandeep Wagle on the show. And Mehrabun, would like to come to you. The cup of overflow, your worries really seems to be overflowing for the equity markets, be it the Cyprus issue or even the global sell-off that we've seen overall for the equity markets. As a trigger point, which do you think the markets will take more precedence to tomorrow? Particularly, will it be the credit policy, or do you think this Cyprus issue will continue to weigh down heavily on the mind of the markets?
If you're asking from the shorter term angle, it will be both. But if you ask me as regards the Cyprus thing, I think it will definitely have an impact, but only for the short term. I think the only thing is that there's a little bit of a fear that will spread. It will be a contagion thing across other peripheral countries. So I think 2012 has come back to haunt us as far as the problems in Europe goes. But I honestly feel it's going to be short-lived. As far as the RBI rate cut goes, I think if there is no rate cut tomorrow, I'm not ruling out a very sharp intraday volatility as far as the bank nifty goes. Should one use the dip to buy into the market? My answer would be yes. But my answer would be yes only for investors who are buying into the market, not necessarily for the traders. But again, the bias should be in favor of private sector banks. On the whole, if you ask me that there is a rate cut, will it lead to interest rates coming down as far as the Indian corporates go? My answer is not necessarily so, not in a hurry. But there will be the gainers here and there. So I personally feel this whole market, the only concern right now is growth going to come back in a hurry? The answer is no. But are we in for a very good bull market in 2014-15? The answer is 100% yes. The reason for this, the macros are improving. If there is no rate cut tomorrow, it's going to come in June. That's the way the big investors are looking at it. Inflation, is it going to come down? Answer is yes. Interest rates going to come down? Answer is yes. Fiscal deficit under check? Answer is yes. Current account deficit, what will happen? If anything, it's going to come down. So with the macros pointing towards a recovery, I think the micros or the performance on the ground as far as corporates go could improve after a time lag. So whether the corporate results for March quarter will be good, answer is no, because government spending has been cut. It's going to have an impact on the numbers. But going ahead, I think people will start thinking positive. So I personally feel this pain in the markets could continue in the short term, maybe for the next 1-2 months, where I feel sharp dips, if any, including, God forbid, if there's no rate cut tomorrow and the market comes down very sharply, should be used as buying opportunity in the top 35-40 companies in the market.
Sandeep, from the trading point of view, how do you think is the current setup tomorrow? Because Bank Nifty recovered around 100 points from the day's low. Some of the stocks which recovered much more than the Bank Nifty were HDFC Bank. So how is the Bank Nifty or Nifty positioning ahead of the big event tomorrow, which is the policy?
Well, Ajay, if you talk of the Nifty, I would map the Nifty in the range of 5750, which is probably 70, 80, 100 points down from the current close. I'm talking of the cash levels. And on the upside, 59, 59, 30, that range will again become a very strong resistance. So till Nifty crosses 59, 50 with force and with volumes and stays above that, we can't talk of a big move. And if that happens, then yes, I would be comfortable talking of 6100. Now tomorrow we have an event, so anything can happen. But I think 25 basis points seems to be discounted. And come what may, I don't see the Nifty breaking 5750 on the downside and 5950 on the upside in the immediate couple of weeks.
All right. Of course, tomorrow is the midterm policy, and there's a ET Now poll which is suggesting that most of the people which were polled, around 100%, expect a 25 basis point cut tomorrow. But when we ask them that will there be a change in the cash reserve ratio as well, 70% or majority of them believe that there would not be any change as far as CRR is concerned. Just the opposite compared to the reverse repo or the repo cut, around 100% of the people polled. They also go on to say that inflation is heading lower, but majority of them believe that it will be sticky around the 6.5% to 7% band by March. However, most of the economists and strategists poll believe that bond yields are definitely heading lower in the coming months.
Right, so let's get in Jitendra's opinion with that as well. Jitendra, you know, we've got the policy stacked up tomorrow. You've heard what the ET Now poll participants believe. What do you think the market is pricing in? Because it seems like a given that there's going to be a 25 bips cut.
Well, I would say this week is quite eventful in a sense. Apart from the Cyprus development over the weekend, I think there are two other important events for the market. One is clearly that ever since January, if you look at the most material part of reforms that the government's been doing, it has been on fuel prices. And I think one big disappointment that investors have had has been on Friday. There was no tinkering on diesel prices. And, you know, whether we should wait it out probably for today. But the fact is, you know, so soon, whether into 2 months, probably post the reform announcement, if you're losing the momentum in a sense that diesel, there is still an under recovery. And if you're not hiking prices in sync with what was spoken about, and it is clearly, you know, not something that the oil marketing companies don't want. They definitely want a uptick in diesel prices. So that's something which has not come around, which has obviously caused some negative impact. Second is what you mentioned about monetary policy. It's a little tricky. You know, we are obviously calling for about a 25 basis point easing going into the policy. But the fact is, you know, fixed income markets don't seem to be pricing or probably the probability of a rate cut is being priced at a very low level given the kind of elevated levels of CPI and so on. So I would suspect that if, you know, if you see a 25 basis point kind of a easing from the RBI, I would suspect that markets would probably stay where they are. But if it doesn't come through, I suspect we are heading southwards.
How are you really looking at news flow from Europe, US? Even China is looking stable now. Are things looking better in terms of global macros now?
It's obviously possible because, you know, India, even in the best of times, remains a highly flow-sensitive market given the acute current account deficit we run. And, you know, in case there is a global, you know, if the globe catches a cold, India is bound to have a big sneeze then. So in that regard, I would say, given the acuteness of our current account deficit, you know, it amplifies the moves either way.
Mehrabun, wanted to bring it to you with a view on the overall banking space because all of these allegations seems to have rattled investors quite a bit. You do have the banks which are adhering to these norms. They have set up investigations. The government, you know, is doing its part on the same. But given that you do have the valuations of some of these private sector banks which are at a significant premium to the PSUs, how would you approach the banking space, keeping in mind the policy as well?
Well, for a very, very long time, I have been very positively biased towards private sector banks. As far as PSU banks goes, your question is very valid, stating that the valuation gap has widened by a very, very wide margin. The point is, should one buy into PSU banks? People argue price to book value is attractive. My question is, what is the book we are talking about? Questionable assets in the books, which may have to be written off in 2016 as per the RBI norm. So not comfortable in recommending PSU banks even now, despite the fact that valuation-wise they may look attractive for select pockets here and there. Private sector banks, your point is valid. Regarding this allegation which has been made and inquiries happening, RBI will come with possibly a risk supervision. Banks may be reprimanded. I'm talking about the three banks, HDFC Bank, ICICI Bank and Axis Bank may be reprimanded. In the worst possible scenario, I see a penalty of a few crores here and there, which may be imposed also. So what? I personally feel that the crime, if it's a crime, if it's an allegation which is proved, if it is there. Some employees have been suspended. I think it's like a pickpocket offense compared to the major offenses done by global banks across the world. So should one use it as an opportunity? The answer is yes. Sadly, HDFC Bank, Axis Bank and ICICI Bank, the stocks have not come up very sharply. What I'm trying to state is, if there is some more negative correction, a negative reaction to this news, and the stock comes down by another 2 to 3 to 4%, I think it will be a fresh buying opportunity. And what I'm trying to state is, I know a whole lot of investors, foreign investors included, who are looking at buying into the stocks if there is a further correction. So what should investors do? Hold on to the stocks. I don't think anything is going to happen. This will ultimately die off with a little bit of penalty here and there. And if there is a drop in the share price, and if there is no cut tomorrow, there's going to be a further drop in the share price of bank stocks, and these three stocks are included, I think go and buy into them, especially in HDFC Bank and maybe an Axis Bank.
Sandeep, how are you looking at the chart of some of the auto stocks? Because pretty divergent trends coming in over there. Hero Moto was outperforming today, but Maruti and Bajaj was severely under pressure.
Well, you are absolutely right, Ajay. Hero Moto is, I won't say outperforming, but it is holding on. Some more upside, some more trading upside with the market, yes. But a Bajaj Auto and a Maruti has started falling today. Bajaj Auto has been weak for the last 3 to 4 days. And I think Bajaj Auto should form a bottom around 1800, 1780, somewhere around that. I think currently it is at 1820, 1830. So Maruti, I think, should crack down tomorrow, and probably Hero Moto may stay sideways. Depends on the outcome of the credit policy.
Mehrabun, how are you looking at some of these defensives? Say Cipla or even Lupin was in the last hour of trade making a comeback, ended at a day's high. Anything you like in that pocket?
I think a scenario in the market in which the situation is still very fluid and growth is still some months away, according to me. We are only in a situation where the macros are going to show improvement. The growth is not going to come back in a hurry. I think I'm advising investors to stay invested as far as defensives go. Be it the FMCG name or the pharma name. And one of the names which you mentioned, Lupin, is among our top picks. I think after Sun Pharma, which has really outperformed a wide margin, the second best bet in the pharma space, according to me, is Lupin. And we are quite positive on the stock with a decent 25% depreciation expected over the next 12 months, according to our estimate.
Okay, so watch out for a Lupin. But apart from that, Sandeep, as a sectoral pack, metals was clobbered in the session today. You had the likes of a JSW Steel, a Hindalco, Tata Steel, all of them coming under a fair bit of pressure. Any shorting candidates or buying opportunities?
Well, I would refrain from the metal space, though I will not be very comfortable shorting. Yes, Sterlite looks set for testing 90, 89 or so, currently at a level of 96, 97. So a 7-8% trading downside is what I would talk of, but nothing beyond that.